Let's get into it. So I'm going to be referencing Robert Kiyosaki's Cashflow Quadrant. If you're familiar with that, that's where most of this comes from, and it's an oldie but a goodie, and it makes sense now. So when we're going to go through those, and this is very important for you to understand how to make money and how you can potentially start something on the side if you can't just jump right into what I'm going to be talking about, because it's not that easy and it does take a little bit of time, but everything starts with awareness. So the first quadrant is what we call the E for employee, as I started to say. E is for employee. You have a job, also known as J.O.B, right? You're trading time for money. Okay, so think about it. You've agreed to work, say 40 hours. A company has agreed to give you a certain amount of money for that time, for that number of hours. And so you work, they pay you. That's called trading time for money. With an employee, you have no leverage, right? So there's no other way for you to make money with this company unless you get a raise, which is completely out of your control. So your amount of active work is what determines your income. Okay, the second one is called S. S is for self-employed. Okay, so now you've gone from being an employee, let's say at a salon, and you do hair, and you said, you know what, I can go out on my own and get jobs from my clients or other clients, and I have more flexibility. Okay, so S is self-employed. You now own a job. You have no leverage because, again, if you don't work, you don't make any money. But you have a little more flexibility. And so this is where, believe it or not, 95% of the population is in the self-employed quadrant, okay? No leverage. If you don't work, you don't make any money. Now let's go to the most important side of this quadrant, the right side. It's the right side, and it's also the correct side. So B is for business owner. Now, instead of having a job or owning a job, you own a system. So think about someone who owns a business, okay? Think about someone who owns the hair salon that I mentioned. They own the salon. They may or may not work there. Maybe at first they did. They hired their staff who does the work and generates the income for them. Whether or not they're there, in theory, the business is going to generate an income, and again, regardless of whether you're there or not. So your income is not dependent on the amount of time that you spend physically in your company or working. And you have a system. And so your income is system driven, and you also have people who work for you. Now, believe it or not, this is where all the money is made. And it's not just because you're not physically there. It's because of the tax structure when you have a company, when you own a company, whether it's a sole proprietor, an LLC, a partnership, they all have their advantages. But even if you just go out on your own, there are tax advantages to being a business owner, okay? And we're going to get into that. But in this particular, podcast, we're going to be talking about the 4 different ways to make a living. And then the fourth way is to be an investor, where your money is working for you, okay? Your income, again, does not depend on the amount of time that you spend. Your money is working for you. So just to sort of to recap what we just said here, we have E for employee, and the most important thing for employees is security. They think they have the security of getting their paycheck every Friday, when in reality, whether or not they get to keep their job really has nothing to do with them. They have no control. They think they have security, but they have no control. And that's because most employees that work as an employee are afraid of risk, and they don't see the need to learn about money or how it works. For them, education is really just to get more skills so they can get a higher paying job with greater benefits. But you're never going to get anywhere if you're an employee, most of the time. S for the self-employed quadrant, again, people in this quadrant are not good employees. They often have an attitude that they can do better, right? So they want to go off on their own, create their own self-employed business and have more flexibility. They like the idea of security. but they have a larger tolerance for risk. And so they don't mind working for themselves. In fact, they like it that way because they feel in control of their future. Example of people in the self-employed quadrant: doctors, lawyers, dentists, accountants, and other service-based businesses and consultants. And they have high standards for their work in many cases. But they don't like to hire employees because nobody does it better than themselves. So now we go to the right-hand side of the quadrant again. This is where you have a system-driven income. Either your business is generating your income, or your money is working for you and generating your income for the investor. So again, the B, this stands for business owner. You have a system. This is where 95% of the wealth is made. It's a better tax advantage structure. And business owners are often seen as risk takers, but from the perspective of a business owner, being an employee is actually the riskiest, because you have no control over whether or not you get to keep your job. So the business owner can make the decisions about hiring, firing, laying off when the economy takes a downturn and whatnot. So when a business owner sees the need for more money, they create a new product, or they acquire a new system that helps them produce more money. And again, the last is I for investors, and that is where they typically have the highest financial education of anyone in the cash flow quadrant. They can find assets that provide a steady income, and they can often use other people's money to attain those assets. So I hope this was really helpful for you. But to just, before we end this completely, for me, I started over in my 50s. And this is actually really important, okay? I didn't have the time to make enough money on my own as an employee. I had been working in mergers and acquisitions, and most of my income was coming from when a deal was done. And so that is a very lumpy type of income, is what they call that. It's deal driven. And so when I became divorced and I had a single income, that wasn't going to work for me. I needed something that would give me current income. And so being an employee was not going to be a good fit starting over at 55. I wanted to build something that I owned that would give me the financial independence and financial freedom, but that wasn't contingent upon the number of hours that I worked. And that's why I went into business ownership. And I would love to talk to you if you're interested in that. Please let me know. But in my opinion, starting over in your 50s, you want to be able to make the most amount of money and have control over that. And so that made sense for me to start a business. And so it's really the cost of choosing between security and freedom. And that's another topic in and of itself. But, the truth is comfort can be fleeting. And I know that because I had the big life while I was married, and things changed. Problems, unforeseen incidents, divorce, losses, all kinds of things that happen to us in life. And that is where being an entrepreneur and building something that you own, the goal there is that you can produce revenue without actually working and creating passive income. And that's why I got into this business. So I'm going to end it there. I hope you enjoyed this, and I look forward to sharing more content on starting over, financial freedom, and how to change your mindset into a growth mindset so that you can become the best version of yourself. Thanks again for tuning in, and I will see you guys soon.